Okay, my bias for the last time is I'm expecting price to trade into equilibrium or lower. Price to trade to equilibrium or lower. That was my bias 2 days ago when I was recording that video. So how about we start this analysis or price study on the 1 day and clear these indicators. Look at what price is doing, and I said that I'd be waiting for price to trade to equilibrium. Feel free to go to the last video I posted and check that, but I'd want to see how it reacted after it went to equilibrium. If it was going to continue to seek a premium or this buy side above these relative equal highs, or if it was going to continue lower. So regardless, we can see that this is Friday's candle, and it actually traded above that prior high. Now, if we put the makeup on, it's a lot of it's a lot of annotations there, but let me see if I can get any clarity out of it. All right. Yeah, there's not really a lot of clarity on that, but regardless, okay. Let's mark the equilibrium. Okay. So 2 days ago, this was the day after I recorded that video. Price did trade below it with the wick, but if we go into a lower time frame, like we'll go into just the 1 hour and view that, okay, we can see price did trade below equilibrium. Now when it did that, there's so much stuff here, oh my god, but regardless, okay, when it traded lower, we had a price trade back up. Okay, so what am I expecting right now in my analysis? Okay, what I'm looking for. So we're on the hourly time frame, okay? And again, look, when I record this video, it's waiting for it to get to that equilibrium, but now I'm seeing price continue higher. Now on that daily time frame, what I notice here is that we finally have some actual volume in regards to the candle that is trading up there. Okay, this was the top of that fair value gap, as you can see right here, which it traded into. Now we have volume actually trading into that fair value gap. So what I'd like to see first, I'd like to see, because we're still just above equilibrium, okay, I would like to see price volume wise, meaning the bodies of the candle, I would like to see it trade to the top of the fair value gap. Okay, we are currently in a premium, obviously, if we're above equilibrium, and I'd then like to see if it's going to go towards these highs before continuing lower, if it's going to go for this buy side liquidity. Okay, we obviously had a lot of bullish movement here, so we can definitely expect some resistance in regards to that. Okay, but anyways, let's get down to this 1 hour. Okay, buy side liquidity above here, above this old high, there's liquidity. Okay, now that liquidity also could induce shorts, and this movement was a little too clean, right? We do have different fair value gaps there, so after it takes the liquidity within the fair value gaps as well as above there, we can look for it to violate prior lows or look for a potential shift in structure. Okay, but that's just on the 1 hour. Let's get to the 15-minute. So a lot of this makes sense. I'm going to first go through my analysis of the prior day because I didn't record it. Okay, so here's the midnight open. Okay, we have the Judas swing above the open price. I put like a watch thing here, but we also have it taking out, this is the open, same open at midnight. New York was also the open for the London session right here. Okay, and we have price trade above that high that was created at the New York open, New York time zone open. Okay, trades above it. This is the Judas swing. Oh yeah, we're expecting higher prices. Ooh. when we really weren't. So I marked a London close here. London closed below the sell side after that move up, okay? So after that was taken and the short-term low was violated, okay, we see price continues lower all the way until we get to New York AM session. Okay, so New York AM session, that's this level. Again, trades above that and takes out these relative equal highs here. Okay, trades actually a little higher, even higher than the London low, but this is a lot of manipulation. This is actually a false move, but it's also very choppy. Let's go ahead and take a look at something I wasn't even really focused on. There was a news driver this day, but it was actually for like 1 p.m. Sorry, give me one sec. Friday, 16. Fly. Okay. So the day I'm looking at right now being Thursday, we had the 8:30 Philly Fed Manufacturing Index, unemployment claims, and then at 1:15 we had FOMC Bernard. So does that explain this volatility here, this wick into the upside, actually creating this high right here, which is actually later violated in the PM, and also creating these relative equal highs, which are buy side liquidity. These levels being buy side liquidity. In fact, why don't we just mark this as a level of buy side liquidity as well? Because it is. We have relative equal highs here, okay, which are violated here. Either way, after we have the open, price trades above, just as it did previously, okay, and it actually trades below the low of the candle, of the open candle, okay? So we can also mark this because it was a relative equal low. We had it trade here and here, okay? And that level, I'm trying to see what I marked here, is also below a prior low from a few days ago. This is the Thursday, oh, sorry, from last week. Last week, Thursday, low, violated. So that liquidity, it's taken and induces longs. Oh, sorry. Eventually, but later on. Okay, I want to look at the AM session, as that's what I mainly studied. Okay. So the price making that move lower. Okay. Boom. Here's the volatility from the 8:30. It's actually really not that much volatility, to be honest. We saw more volatility 9:30. So here's that 9:30 volatility, taking out that prior high, that prior short-term high. Okay, taking out that those prior relative equal highs before the open and the relative equal lows, taking all that liquidity with no oppositional movement, meaning that it was an inefficiency, price delivered into the buy side inefficiently, and we then see price go for the liquidity above these relative equal lows and below Thursday of last week's low. Okay, price trades lower and then induces longs above these relative equal highs right here. Okay, let me just mark this as a level of buy side liquidity. Okay, because it's relative equal highs. So we'll just do that in the center. Okay, and let's just move it a little lower. Now we also have this fair value gap here, which the model tells you to treat fair value gap just like you would a trade above relative equal highs. Now, regardless, like I said, we're not going to focus on PM just yet. Regardless, though, we have the initial low created and violated here, and even goes as far as here. Okay, so the morning was extremely bearish. However, entry-wise, we have these highs violated on the upside, massive displacement lower, which gets traded back into right here, creates these relative equal highs as a level of buy side, continues lower, okay, retraces, and continues into lunch. Trades above prior high, okay, displaces at equilibrium, trades above equilibrium for this AM session range, and continues even lower. Now, here we go. This is the lunch session. Not really focused on that. However, in PM, these relative equal highs get taken. Price decides to displace higher. Let's look at how that liquidity from right here affected that. So this was the liquidity at 1:15 p.m. So there we go, 12, 15. Okay. So that liquidity right here instantly after lunch. We had this massive displacement here all the way till 15. We have volatility, right? If price even trades down here for this small imbalance that was created at lunch to rebalance it. But after that, price trades into the buy side, taking out the relative equal highs. After that buy side liquidity is taken, it induces short positions below this old short-term low. Price trades back into that displacement lower, or the imbalance that was created here as it traded lower, actually trading below equilibrium, I believe. Let's check it on the move. Okay, so perfect. Trades back above equilibrium before continuing lower all the way to the close of the day. Now, I personally wouldn't be trading that late into the PM session, especially because this just rallied up and consolidated, but still interesting to study, okay? Here, we have these levels of buy-side liquidity taken, okay? Price trades higher, trades lower, and then trades back up. I didn't really study afternoon like that, but we're going to study Friday's price action, and we'll look at the opening prices first. So here we go. We have the open New York opening price here. Okay, price creates this buy side for the London AM session, does that at 255. Now, after that high is created, we have a fair value gap that is created after, where price was delivered inefficiently. It creates this low, okay? Creates these relative equal lows around the same spot. Boom, takes out that sell side, okay? It does it here as well, all right? And then we see price rally above the New York opening price in London session for rallying higher. But this was the entire London session, not to be confused, all the way right here. Okay. So London session finished violating that sell side, inducing longs into the buy side, trades to the fair value gap that was created. Okay, we have all this movement into Friday's open. If we look at the news here, day 5, we can expect liquidity at 10 a.m. and 1 p.m. Okay, so after that, after it trades back into that fair value gap, okay, creates these relative equal highs here. We see it trade lower. Okay, price trades lower and continues higher. But this isn't, like I said, this isn't in a session or anything. So price decides to take out the buy side before New York session. So when it takes this buy side, we have all these relative equal highs here. This is a level of liquidity. I marked it as buy side, okay? In the New York Open, we have price instantly trade low, just as it did prior, okay? Just as we had the accumulation of orders, okay? We had accumulation, price trades above that back into the New York AM session, open price, and then displaces lower below the sell side from the AM open and induces long positions, okay? And so we do see that. We see it trade above these relative equal highs here, and we see it trade all the way back into this imbalance that was created back here. We see price, give me 1 second here. Okay, we see price actually later on in the afternoon trade to this imbalance back here, okay? And we see extreme bullishness in the market. Now, sorry, let me go back to here. Let's study what price did at 10 a.m. and 1 p.m. So the first thing being 1 p.m., okay? 1 p.m., it didn't really do much. I mean, we did have a little bit of displacement lower, but as soon as around 1:30 came, that's when we saw it trade into that previous fair value gap, okay? Regardless, in the AM, we had that prior high taken, with that buy side taken, trades back into this imbalance, trades actually even lower, this imbalance right here, after taking that buy side, trades back down. Then after that, we see massive displacement onto the upside. After this sell side is taken, see massive displacement to the upside. And this goes back to the point I was trying to make in regards to the levels of liquidity, okay? So here we go. We have another level of liquidity above these prior highs, which, since I'm on the 5 minute, let me get this more accurate. Boom. Okay, above this old high. Oop. I'm gonna have to fix that. There's buy side liquidity as well. Above that old high. Let me just correct everything. Okay. Boom. There's liquidity above there. And I get the feeling that on that higher time frame, we're going to see price trade to volume wise on the higher time frame. We'll see price trade to the very top of the fair value gap. Okay. Now, after it does that, we have this fair value gap, which I marked on the 1 hour time frame. We have this very fair value gap here because all this price on Friday was delivered very inefficiently. Very, very inefficiently. Okay. But we do have this level of buy side liquidity here. And then we can expect shorts as we are in a premium on the daily time frame. So we can expect that sell or that buy side liquidity, to be taken and induce shorts. But again, I want to see, I'm still paying attention to how price is going to react onto the, let's go on daily time frame. Give me 1 second here, because that didn't look right. Okay. So here I had marked this prior high. Okay. We now have this order block here, which was a change in the state of delivery because the prior 6 days was complete, inefficient, bullish movement. Okay. We have massive displacement, this very large candle on Friday. Okay, and on Friday, ICT talks about how price has a way of going to the levels that it would like to reach, and we can see that price is trading very, very quickly through this fair value gap. Hasn't fully We balanced it, not volume wise, it hasn't. And there's liquidity above, but I'm first just looking for this liquidity to be taken in this fair value gap. We now have these semi-relative equal highs here, but I'm mainly focused on this buy side liquidity, which this buy side liquidity here doesn't really make a lot of sense when you're just looking at it on the day time frame, but that's that previous high that I was saying I'd like for it to be wiped out. And if that gets taken out, then we have different key levels here that I marked on that 15-minute, which is this imbalance here, okay, this imbalance here, okay. Those are two different levels of liquidity that we can expect price to retrade to, and then pay attention to, well, does price want to continue to those relative equal highs on the 1-day time frame? Can we expect that out of price? And we're just going to pay attention to price. I'm not picking tops. I'm paying attention to where price is going to go after it takes these levels of liquidity. How is price going to react after it takes that buy side? Can we expect price to trade further into a premium before continuing lower, or are we going to expect that to be enough, since overall we are in a, if we look on the week, we overall are in a bullish market. Everything's very bullish, okay? And we can also, let me clear this off, okay, if it was to violate this buy side liquidity, okay, or take out these relative equal highs, we could almost be looking for a shift in market structure. We could see for a shift in market structure, but let's not get ahead of ourselves. Looking at price, this is what I've seen. Was I wrong in my analysis from 2 days ago? No. Price did trade to equilibrium, and now we're seeing it trade back into a premium. What is my bias continuing forward? Well, I'm going to expect price to take that buy side liquidity, and I'm going to expect some kind of reaction to that, whether that induces shorting positions then being to those key levels, or if I was expecting, if it continued higher, I'd be expecting it to reach for these relative equal highs. But I'm more just because of, I'm expecting, okay, where is price likely to go? Well, after it takes these levels of liquidity, we can expect price to go lower. But there is a lot of liquidity above these relative equal highs here, which could be enough for smart money to take us. That might be enough to induce shorts into the sell side, and we'll see price violate these prior lows, these relative equal lows, and take that liquidity. So that's pretty much everything, you guys. I wanted to keep it really simple. This one was really in depth because I really haven't done anything these last few days, but I really feel like I've made a lot of progress trading wise, or paying, not trading, I'm not trading, I'm just reading the tape, I'm watching what price has done, and I feel like I've made a lot of progress on like just paying attention to these key levels, paying attention to where liquidity is. Now there's a whole different part to it, which is what I need to work on, which is studying SMT divergence, because I really haven't studied that at all. I also need to be you know, kind of eventually like studying risk and stuff, but this is what I am doing now with what I know. I'm applying the power of three, which ICT teaches. That's me talking about those opening prices. I'm now looking at like that 9:30 liquidity injection into the market. I'm looking at the news drivers, seeing where price is likely to go, and I'm reading the tape. I feel like I'm doing it efficiently, but ICT has a lot in store this year, and I'll be able to learn more just from watching his lives. I've been looking on the Twitter space, and I've been just really avid about this. I really want to win this game. That's all this is, you know. I really want to win this game. I want to be able to live my life. That's what's on the line here. That's what's on the line here. Living life, or living life working for someone. I've had all these trials and tribulations all week. I've had these ideas of just not wanting to work, not being motivated to work, because I know this, you know, working is a stepping stone to this, but I want to get to trading. But I also am building a foundation here. I'm building a foundation, and one that's not based on emotion. I'm studying price, and when I feel a certain way about something, I'm looking at that and understanding that I need to be doing this, making quick, emotionless decisions, not based on loss, loss or gain, but in respect to risk. In respect to risk, which I'll continue to learn about, and I'll continue to go through the ICT mentorship, and I'll continue to study the 2022 public mentorship even when I'm done with it, until I fully understand all the concepts, until it makes sense, until it clicks, and until I'm profitable. I will continue this path, as this is the path that I'm taking to help my family to get what I want out of life. This is the bridge. There's no capital needed to get funded. I mean, you need some money, it takes money to make money, but this is the bridge that takes me to other income streams and other things that I'd like to do. It's crazy watching ICT turn a demo account from 100,000 to 300,000 in a week. And for people to be like naysayers towards them, if people want to be naysayers to ICT, he's already addressed those people. I'm not going to address them here, but you see the things I'm looking for. Okay, if ICT is wrong, then nothing I would be saying in these price studies would work. If price wouldn't trade to equilibrium, how did I know price was going to trade to equilibrium? Must be luck, not anything with what ICT teaches, right? I'm joking, but yeah, let's end it off on that. I'm starting to ramble, but I'm excited for the continued journey of trading and what it will do for me and what I will learn and who I'll become. That's it. See you guys.